Today, I want to talk about and go through some further confirmation of the AMC Disney buyout. I also want to talk about how and why Adam Aron put specific processes in place to avoid a hostile takeover by another firm while working on the potential Disney buyout. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So you may have seen this tweet from Yahoo Finance that said Bob Iger, the CEO of Disney, demands that Disney employees return to the office 4 days a week. Now, so I started off by thinking that a 4-day work week actually sounds pretty good. Working in the office 4 days a week and maybe working at home for that extra day doesn't sound all too bad. But then I was thinking, actually, hang on a second, who else really has been advocating for a 4-day work week? Well, obviously back in September, Adam Aron tweeted saying Twitter poll number 2 on a 4-day work week. So far you overwhelmingly like this idea. As you know, I have a significant voice and substantial platform. It's a dramatic change to the traditional US work patterns of the past. Should I be out front in urging a 4-day US work week? So it seems like Adam Aron and Bob Iger are on the same page about a 4-day work week and seem to agree on many different things together. And on top of that, back in November, Adam Aron tweeted saying breaking news. Based on box office grosses, Disney is the biggest filmmaker of any movie studio. Bob Iger coming back to again lead Disney as its CEO is a big deal. He said, "Let me shout this from the mountaintop. I have the highest respect for Bob Iger." So not only do Adam Aron and Bob Iger see eye to eye on a 4-day work week and agree on multiple different things, Adam Aron and Bob Iger clearly have some kind of working relationship, and Adam Aron has the utmost respect for him. Now, importantly, how this all ties in is that during this potential AMC Disney buyout, Adam Aron has been the potential target of a hostile takeover. Maybe that is why Adam Aron has the utmost respect for Bob Iger, as Bob Iger is preventing AMC from being taken over in a hostile way, and in fact they're coming to a mutual buyout agreement that benefits both shareholders. So Retail Stocks tweeted saying, "I remember hearing rumours that Citadel and other unfriendlies might try a hostile takeover to avoid covering their shorts." Obviously, if Citadel or another potential streaming platform, take Amazon for example, take over AMC and come up with some terrible ideas to make AMC lose money and go bankrupt, that would obviously be brilliant for those shorts. If Citadel or Amazon buy out AMC, increase the ticket prices to $2,000 per movie ticket, not a single movie ticket will be sold, and AMC would be wasting money and end up going bankrupt. That way, AMC would be finally delisted and relegated to the pink sheet OTC stocks, where Citadel and the other shorting hedge funds would effectively have their victory. At that point, they would have successfully made AMC go bankrupt, and they would have successfully seller boxed AMC on top of that, and they would never have to close out of their shorts. But that is why Adam Aron put specific processes in place to avoid any potential hostile takeover that didn't have his permission. When APE was released, there was a new filing, and especially during the Q3 financial statement filing, there was a new clause included in the accounts. It says certain provisions of our certificate of incorporation and bylaws may be considered to have an anti-takeover effect and may delay or prevent a tender offer or other corporate transaction that a stockholder might consider to be in its best interest. These provisions are designed to discourage certain types of transactions that may involve an actual or threatened change of control of AMC without prior approval of the AMC board. And it specifically says our issuance of shares of preferred stock could delay or prevent a change of control of our company. It says our board of directors has the authority to cause us to issue, without any further vote or action by the stockholders, up to 50 million shares of preferred stock in one or more series, to designate the number of shares constituting any series, and fix the rights, preferences, privileges, and restrictions thereof, including dividend rights. Basically, the fact that AMC issued this preference APE dividend ensured that AMC could not fall foul to a hostile takeover, potentially by Citadel, by Amazon, or by anyone else. As Dave Murphy tweeted, he said, "I'm just throwing this out there. Not saying this was the reason, but it is possible that games were being played behind the scenes, which we the shareholders were unaware of, and APE was a checkmate against an unknown entity, potentially Jeff Bezos and Amazon, to prevent a hostile takeover." Guys, if you haven't done so yet, be sure to subscribe to the channel, drop a like down below, and ding that notification bell, because that way you'll be alerted when I upload a new video. And he said, so if you're wondering who Adam Aron is playing 4D chess against, look no further than Jeff Bezos. I think this tweet here really explains why a hostile takeover would have made sense to Citadel or to any of these other short hedge funds. If they could have successfully performed this hostile takeover, they would have had full control over AMC, as they would have potentially owned the majority of shares, and they could have done whatever they liked. They could have boosted the ticket prices, dropping revenue, or increased expenditure to new highs, crushing the company and ensuring that it ran out of cash and went bankrupt. That obviously would have been a brilliant plan for those shorts, as it was practically the only way those shorts could have made AMC go bankrupt, and the only way they could have successfully seller boxed AMC. So maybe APE was actually the pounce that Adam Aron was working on, and it was specifically designed to prevent a hostile takeover of AMC. But now that Adam Aron has hashed out the potential buyout agreement with Disney, he's happy to convert APE back into AMC, as there's no longer a significant risk of a hostile takeover, as the buyout agreement may actually be finished. Adam Aron could have been working directly with Bob Iger to ensure they could figure out a way that Disney could buy out the AMC shares without any synthetics existing and potentially causing the AMC squeeze. Because we know that when the APE AMC conversion happens and when the AMC reverse split happens, it effectively forces a new share relocating, so the shorts actually have to locate some real shares. Theoretically, that should cause all of the shorts to be forced to cover, causing the AMC squeeze, at which point Bob Iger can swoop in with Disney and pick up AMC for a fairly good discounted price. Because obviously we know the squeeze is only a temporary event, and after the squeeze happens, the AMC share price will return to a normal level. And obviously when that happens, it'd be perfect for Bob Iger to swoop in with Disney and buy up all of those AMC theatres. It would really help to catapult Disney to the top leading movie studio and potentially the top leading movie showing studio and potentially top leading streaming service as well. Disney would be a one-stop shop for creating movies, showing movies in person and showing movies digitally via Disney+. It would really give Disney a way to crush Netflix and to crush Amazon while causing the AMC short squeeze. On top of that, something else I found very interesting was the sheer number of cancelled AMC and APE shares over the last few weeks or the last couple of months. Saint Snap tweeted saying in my previous post I left out APE, and the AMC and APE combined cancelled trades was over 73 million individual trades in November alone. Saint Snap obviously managed to extract the cancelled orders from Citadel prior to execution for a number of different stocks like AMC, APE, GameStop, CNK, Google and WBT as well. We can see that AMC and APE had a combined 73 million cancelled trades or 73 million cancelled shares to be purchased during only the month of November. And actually just checking, this is the Citadel cancelled orders, not just the individual shares that were cancelled, but total orders. Over 73 million orders cancelled in one singular month. Now, I don't fully know all of the reasons why an order might end up being cancelled. It may be too far away from the current market price, or it may be because there's not enough real shares to fulfill the order. Citadel obviously struggled to locate real shares if they had to cancel 73 million individual orders during the month of November alone. And I suppose that's struggling to locate real shares either to short or even specifically for us retail investors just to buy actual shares. I personally believe these cancelled trades should really be facing more pushback, considering the last time that trades were cancelled on a stock exchange was during the London Metals Exchange cancellation of the nickel trades. You may remember this tweet from Coin, who tweeted saying the London Metal Exchange, in an unprecedented move, halted nickel trading and cancelled all trades on Tuesday as a race to cover short positions saw prices double in just hours to record highs of above $100,000 per tonne. However, something else I found very interesting is the recession probability model from the New York Fed has climbed beyond its 2020 peak and is now at its highest level since the 2008 global financial crisis. This is basically saying that at the moment the New York Fed reckons a recession is practically a guarantee at this point, nearly 40% likely, which is nearly as high as it was back in 2008. Therefore, it seems a 2023 recession is practically a guarantee at this point, and it's very likely we will see the S&P 500 falling further, causing a massive wave of liquidations. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.